Sure.
Oh, I'm still here.
Get one favorite like a Big Mac or 10-piece chicken McNuggets and get another for just $2. Right now at McDonald's.
Lord Chargington requires less routine maintenance than most other gentlemen.
Oh, I'm still here.
Get one favorite like a Big Mac or 10-piece chicken McNuggets and get another for just $2. Right now at McDonald's.
Lord Chargington requires less routine maintenance than most other gentlemen.
I'm still here.
All right, I think we're good to go. Give me 1 second, guys. Let me update Discord so everyone knows I'm live. All right. Okay, sorry about that, guys. I think I'm good to go. Let me make sure I'm recording. If you guys are in here, make sure you can hear me. Hopefully my audio is okay. Hopefully the music isn't too loud in the background. If you can let me know, that'd be awesome. Let's go ahead and get started. First things first, of course, we're gonna recap the trades that we took yesterday in case you missed the live. Let me actually turn this down just a little bit. Okay. So yesterday we took 3 setups. I had a trade on GU, Euro USD, and Euro JPY. And I just want to talk about it for a second because I use some common concepts that isn't really as difficult for the beginner trader that you can find on an everyday basis. Okay, so starting out with market gaps, right? Whenever the market is fluctuating for a long period of time and you're in a range and you notice that there's a bullish or bearish impulsive candle, meaning it's a candle that has a lot of volume or volatility, you want to highlight that candle, because at some point the market's going to come back and fill that candle up. Okay, so in this example, although I have a lot going on my chart, I pretty much separate price into ranges. So this could be considered as range 1, right? And this can be considered as range 2, especially looking at higher time frames. Okay, so what I like to do is I use a blue line to separate these ranges, and as you can see, there's a divider between that trend or price. So as you can see, there's a touch right here, right? There's a touch right here, right? There's a touch right here. It's not exactly touching this blue line, but this is how I'm just separating these ranges in general. And then there's a touch right here, touch right here, touch right here, and touch right here. Again, it's not perfect, but I'm just drawing a line in general to divide these ranges. Hopefully that makes sense. I'm dividing this range or these ranges from that bullish impulsive candle. Okay, so we have range 1 and we have range 2, and then I have this candle highlighted, right? So that I'm waiting for price to have that break of structure, which is over here. And notice how they kind of look alike. We have a bullish impulsive candle right here. We have a bearish impulsive candle right here. And notice how for it to break this range, or for it to come back in a range 1, it has to have an impulsive bearish candle as well. You won't always see an impulsive candle for it to come back into our general range, but in this example, price fills this candle. Okay, or if you don't want to go along with this concept, we can simply say, right, that price just grabbed all this liquidity. You see where these blue arrows are? Because you have to remember, when traders see something like this, which is called a break of structure or a break and retest, they're placing orders. So a lot of people are buying right here, right? They're buying right here. They're buying right here. They're buying right here. They're buying right here. So what happens when people are placing orders, guys? What happens when people are placing orders right here? People are placing orders right here. Oh, this is a sell, my bad. People are placing orders right here. People are also placing orders right here. What's happening? Liquidity is being built up from your entry to stop loss, okay? So I'm gonna use this icon right here. Let me find it. Here we go. Place it right here. And this is representing liquidity, okay? So when we have a break of structure, price is grabbing all of this. Hopefully that makes sense. And this is why these candles are usually impulsive, because when they move pretty fast like this, it's because they're grabbing a lot of orders that are already built up from a previous zone, or if there's liquidity below in a certain area of support, resistance, supply, demand. That's why we have these fast candles in the market, okay? Because they're grabbing these orders. Can't I join it from Chrome, for example? I think so. Is the link not working? I might have to update my whole link and update it for all my videos. Try joining the Discord from this stream. I think I put it in the description. If you can't, just let me know. Okay. What was I saying? So basically, price comes back into this range, and then it also respects this zone of supply. And then we talked about this yesterday, but sometimes a lot of traders freak out when price is going through a certain zone that they have marked up. But just wait until we have a closure at price. So this right here could be a good example of a fake out, because price is wicking off of that zone before coming back in. So looking at the higher time frames, you can clearly see that price is wicking out and it's not closing below this zone. Okay, so then it comes back into our zone. We placed a nice buy, a long position, and then price did its thing. So this was a nice 1 to 2. We were risking, I believe, 17 pips for a total of 34. So this was on Euro USD, and then on GU. So again, I use the concept of ranges, gaps, and liquidity. Very, very simple. And then again, I highlighted this candle because what happened over here? Price filled this candle. And what do you think is going to happen with this candle? Price is going to fill this candle. So notice how price is doing exactly that. And then going to its desired demand zone or resistance. Hopefully that makes sense. If it doesn't, just let me know. Because sometimes I talk fast and it makes sense to me, but it might not make sense to the next person. All right, so on GU, this was a trade I sent out 2 minutes before the live. This was a nice 1 to 2. We were risking 20 pips for a total of 40. So that's already 70 pips. And basically I used the same concept, guys. Looking at gaps in the market, we had this nice zone of supply, stretched it out. We had this nice confirmation that the zone would hold because we had a wick off right here. And then I stretched this zone out, waited for another touch, and we entered in for a nice 1 to 2. This is fairly simple. I just use the concept of gaps, guys. This was more of gaps and liquidity and ranges. This is simply just a gap. Very, very simple. And then, of course, I have this zone marked up. So this was fairly easy to understand. And then our last trade, so that's 70 pips. Price did its thing. We smacked TP2. We had Euro JPY, and this I believe was pretty familiar as well, as long as with those concepts. So notice how we have a gap right here. Boom. Touch right there and a touch right here. So once I saw that, I entered in for a nice 1 to 2. I believe I was risking 35 pips for a total of 70. And I was simply just using gaps as well. All right, so that was that yesterday. And then for today, I think we're gonna look at gold. And like I said, guys, gold is gonna be bullish all week, okay? It's gonna be bullish all week. The question is, where can we find these pivotal points in the market to have a nice entry for a bullish continuation, okay? So matter of fact, I'm gonna go ahead and mark this up right here. We might see gold hit 1900. By this month. And again, if you guys have any questions, let me know as I'm going over these trades. I'm actually going to keep this up for review. But let's go ahead and check news in the next minute. Let me go ahead and highlight these trades for review. Oh, the last concept I used was the RSI. I'm sorry, guys. I was using the RSI as well to help me determine if price was oversold enough to catch a buy. Very, very important. So right now I'm just briefly looking at all these pairs just to see what I see in the market before we check news. All right, so first things first, let's go on Forex Factory. Let's see what we got going on today. So 10 a.m. we got ISM manufacturing PMI. We got job openings, ISM manufacturing prices, FOMC today. Okay, at 2 p.m. So we have something going on at 10 a.m. I'm probably just gonna have to update all of this in a Discord once I get off YouTube. But we have high impact news on USD pairs, which is interesting. And then at 2 p.m. we also have high impact news on USD pairs. So the pairs that I highlighted that contain USD so far is AUD USD and of course gold and Euro USD. So those are going to be the main focus of this morning. And we'll see what happens. We'll just go from there. So I'm looking at AUD USD and we have this nice demand zone, right? We have a confirmation right here letting us know that this is a strong zone that might hold. We have one touch and we have another touch approaching. So again, the best thing you want to do when you find price coming near your zones of supply and demand is wait for it to touch that HPI, which is highest point of interest in that zone. So ideally, we don't wait until price hits this surface so that when we enter in, we can have a safe stop loss, right? Our stop loss can be above this zone. In these scenarios, you can also just place a sell limit. So this is more ideal. We're gonna see what happens in the next 15 minutes though, so we can get a nice closure. But this is something that I usually do when I see price entering my zones of convenience. Okay, let's check FX Street. All right, gold jumps 1.50% to fresh 7 months. Gold price is trading close to the highest level in 7 months, above 1800, catching a fresh bid in European session. Okay. Also, please let me know if you guys can hear me. For those of you that are in here, let me know if my mic is okay. Let me know if nothing's too loud, as I don't have any moderators yet to tell me. So we're gonna see what happens in the next 15 minutes so we can catch some trades. That would be awesome. And of course, when it hits 7 o'clock or 7:30, that's when we're gonna start our workshop session or a free class. I'm gonna send this in Discord. Give me 1 second, guys. I'll be right back. All right, I think I'm good to go. I'm actually gonna go ahead and enter in right here with a sell limit so that I'm not distracted later on. What up, what up, what up? What's good, Money O? How you doing, bro? Let me go ahead and place this real quick. Let's see. Again, guys, the Discord link should be in the chat. But if the link doesn't work, let me know. I think someone was having a hard time getting access, but everything will be updated there. I feel you, bruh. I feel you, trust me. Money, oh, we got to collab this year, bro. I gotta either come to Texas. We gotta get a video going on. You gotta hop on the podcast as soon as possible, my guy. Please look into giving us a link in code, bruh. I'm still confused. You should be able to have access to my Discord if you click the link. It's in the description as well. I'm not sure why you can't get into the Discord. I'm a bit confused. All right, so we're gonna wait for the next 8 minutes, get a nice 30-minute closure, and we're gonna look at the other pairs that I have marked up. We're gonna try to find some other setups. But right now I'm gonna go ahead and place a sell limit. All right, let me go ahead and set these alerts. All right. So I'm now in a sell limit for AUD USD. We're gonna give it another 5 minutes and look at some other pairs and talk about some other concepts. But hopefully what I went over earlier with my trades that I took yesterday made sense in terms of using market gaps, ranges, and the RSI. So today is the 4th. And what I'm doing, guys, I'm gonna keep a track on every trade that I take live. And by the end of every month, we're gonna go ahead and calculate all the pips that I accumulated and all the pips that I guess didn't, so that I can have a certain percentage. It would be on a spreadsheet so you guys can see my accuracy. I can't speak this morning on these live trades. So what time is it? 6:25. AUD USD. We have about 2 more minutes. All right. Let me go ahead and update the display. Give me 1 second, guys. It's right here. All right. Again, if you guys have any questions about any of the setups that I have posted this morning or from yesterday, please feel free to ask any questions and I will answer any. because I know sometimes some concepts can be more confusing than others. And when I speak, sometimes it makes sense to me, but it won't make sense to the other person. So just call me out if anything doesn't make any sense, and I'll be more than glad to talk about it again. All right. But it's now 6:30. Let's see what's going on with these pairs. As you guys see, I was just reviewing some setups that I want to send out in case you guys want to look at this as well. Simply waiting for a break of structure, noticing that price is in this range, right? We can divide this as well into two ranges. Range number one, range number two. And trading is all about high probability, right? So you can get a bias for an upside or the downside, right? We could say that price could bounce off of this resistance and continue to fluctuate in range one. Or if we have a breakout, it's going to come back into range two and fill this candle. So either way, because one can say, right, people hopped in right here and there's liquidity being built up above this range or above this resistance, and people could potentially catch a breakout, right? Back into range two, or vice versa. People could say that since we have a touch right here, price could form a ranging market. Ranging market meaning that price is literally just going to go in and out in range one from support to resistance. So this being resistance and this being support, right? Range being that price is going to fluctuate and continue to go in and out like this for a longer period of time before we have a breakout. So in ranges, usually price is not ready to have that breakout. So you could catch another sell here. But we're just going to have to see. It's all about prices, guys. The opening and closure of price. If we have a close above the zone, the price is more than likely going to continue up. If we don't, then it's going to continue down. And I think I put a video on Instagram. This is what I like to refer to as the box strategy. You box in price when it's pretty stagnant, if it's consolidating, or if there's a range, it's much easier to see and you're waiting for a break of structure. Very, very simple. Hopefully that makes sense. So yesterday we talked about shadows, aka wicks, long versus short, the opening, close of price, and then today we're gonna go ahead and talk about my favorite pattern, which is the dojis, and we're just gonna focus on wicks. Okay, so the doji candlesticks, the dragonfly or pin bar. And I think we'll stop. I think we'll stop there because I don't want to give out too information on one day. I want to spread it out. So what's today? Wednesday, Thursday we'll talk about combining these patterns together. So usually they have a name for it. This would be evening star. This would be morning star. Or this would be a morning star. And then I think that should be good for the week. And in the course of the weekend, I'll review everything and either post it in Discord, or for those that are in the mentorship, I'll clip up all the videos. So in case you guys miss anything, it will be there. And then next week, we'll talk about more of the advanced patterns. We'll do some live examples. I think it should be good. So again, in case you guys missed it, this morning we do have news at 10 a.m. on USD pairs, and then we have FOMC at 2 p.m. So I might trade later this evening, but everything will be in the Discord. I'll update everything after the live in case I am still trading. But at 10 a.m. we have ISM, manufacturing PMI, we have JOLTS job openings, and then at 2 o'clock we have FOMC meeting minutes. And for news, if you guys simply want to understand why it's important, it gives all this information here at Forex Factory. Why traders care. It's a leading indicator of economic health. Okay. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Very important. And then it has notes right here. And then it just gives a name. That's pretty much it. But this is probably the most important part you can read, because it's going to give you insight on why traders care on that fundamental aspect. Okay. And then JOLTS job openings. Let's see. So it won't always have it here. You might have to just look it up on Google or whatever browser you use, but it will give you some data here. And then FOMC, let's see if we get some information. Okay, cool. Why traders care. It's a detailed record of the FOMC's, which is the Federal Open Market Committee, by the way, if you guys don't know what that means. FOMC, Federal Open Market Committee, most recent meeting, providing in high-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. Okay, that's also important. It's all here on Forex Factory. If not, you just do a simple Google search. And I think that's it. So that's what's going on today. And I might as well just look at the rest of the week. Let's see what's going on Thursday. So Thursday, okay, cool. We have news during our live, or it's going to be 15 minutes after the live tomorrow. But it's ADP, non-farm employment change. It's not NFP, guys. Don't be confused. That is tomorrow, but this is on USD pairs. And okay, cool. Why traders care. Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. And then Friday, because I know I don't go live Friday for YouTube, but what I think I'm going to do is go live for... Actually, I'm just gonna have to see. I'm not gonna make any promises because my schedule is pretty wacky right now. But I might do a YouTube video for NFP as I used to. I'm not sure yet. It might be for Discord. It might be for services. I have no idea yet. But as of now, I'm only going live Monday to Thursday, so I have time to recover on the weekend and focus on content creation. So I'm not gonna make any promises, but I'll keep everything updated in the Discord. So let's go back to Wednesday. Okay, cool. Does anyone have any questions about USD while I'm taking this setup? If you do, feel free to ask. Otherwise, we're just gonna chill and wait for 7 o'clock. I might start the workshop earlier, talking about the doji candlesticks, or I might just do a 30-minute session like I did yesterday, so that I have more time to analyze pairs. Of course, you guys can send me any of the pairs you look at. Simply just copy the trading view link after you take a screenshot, or just go to this camera icon, put it in the chat, and then I can pull it up on my monitor. see. All right, guys, I'm gonna be right back. I'm gonna go ahead and get some cereal because I'm low key hungry. But if you have any questions, feel free to ask them. We're gonna wait for the next 20 minutes, the next hour opening to see what we have on the pairs we have marked up. Otherwise, we're only looking at AUD, USD, and gold this morning. All right, I'll be right back. All right, so we have about 15 more minutes. As you guys can see, AUD USD is still fluctuating. Now, it could react off of this lowest point of interest and continue to shoot down, but that is okay. So the whole point of trading these zones, guys, is to make sure your stop loss is safe. Okay, you don't want your stop loss in these zones, right? So imagine if I placed a sell right here and I wanted to use a low stop loss, which is 20 pips or around 20 to 30, my stop loss would still be in this range. So let's say price decides to stop me out before shooting down, then I potentially missed out on a good sell because I rushed my entry. So you want to wait until your stop loss is either outside of that zone, so that if it does decide to shoot out or hit your stop loss, you know for a fact that this zone wasn't valid, okay? Or it wasn't accurate. So again, if I have my stop loss right here and price decides to stop me out, and then it decides to come back into profit, then I potentially missed out and I'm over risking. That's what a lot of people, that's like one of the biggest mistakes I see a lot of people make because they're rushing their entries. Just wait for price to go to a certain area you have marked up. You don't want to follow price, you want to lead it, guys. Never follow price, just lead it. So be patient in the market and wait for price to do its thing. And that's one of the mistakes I've made when I first started using these type of concepts. I would always rush my entries. I would see something happening and then I'd be like, oh, okay, well, it's here. Let me just go ahead and sell or let me buy, instead of waiting for my stop loss to be in a safe place so that I know if it does hit my stop loss, this wasn't a valid setup, if that makes sense. If you guys have any questions, you go and ask any. We're gonna wait for the next 10 minutes at 7 o'clock and we'll see what we can see. If we do get a closure below this zone, then I might consider entering in. But since price is still fluctuating, I want to see what's gonna do before I switch my bias. Okay. So I usually wait for the next hour interval. If we get a closure below the zone, then we can most definitely try to look for a sell. But if price is still fluctuating in that zone, guys, you just want to wait. Just a quick reminder as well as we wait for 7 o'clock. If you guys are consistent, if you're a consistent trader and you like watching my lives and you would like to help in some sort of way, I am looking for moderators all year. People that can just make sure my lives are good to, excuse me, are good to go. Make sure my audio's in check, my screen's in check, so that I don't have any problems. So yeah, if you guys are interested in that, simply just reach out to me on Discord or just reach out on Instagram. That'd be very, very helpful, as I am going to be consistent all year. So we have about 6 more minutes. Again, if you guys have any questions, please feel free to ask. Otherwise, I'm simply just waiting for that next interval. We have about 4 more minutes. You said the sound keeps going off. The sound keeps going off in your time frame, please. The sound keeps on going off. If you just joined, I simply just muted myself and I told everyone I'd be back at 7 o'clock. I just mute myself when nothing's going on. So 7 o'clock, we're gonna see if we can find an opening or closure below a certain zone, or look at other pairs. But let me know if you guys can hear me. Like I said, I don't have any moderators right now, so I'm only one person making sure everything is okay to go. But if you guys see an issue, please let me know and I'm gonna try to fix it. All right, so it's 7 o'clock. Let's go on the hour time frame. So I'm definitely gonna still hold my sell limit at this HPI, guys. I'm not gonna try to sell, although it could be a nice potential sell. I am going to wait, okay? I am going to wait. Euro USD is doing its thing. We're gonna wait for it to hit around this area where I have it marked up. GU looking good. Okay, Euro AUD. We're waiting for price to continue to melt around 1537. And we actually could just draw this out like this. Sometimes I use lines just because it's easier, but I could just draw this out like that. And then this would be our LPI right here. Yeah, my apologies. I mute myself for like no longer than 2 minutes, 2 to 3 minutes, because when nothing's going on, I'm waiting for the next interval. So like, let's say if it's 6:17, I'd mute myself and wait for 6:20. Let's say if it's 6:26, I'd mute myself until 7 o'clock, because I'm looking for the next open of price, if that makes sense. And that's something I kind of went over yesterday for yesterday's live. If you watch yesterday's live, it's up on YouTube. Skip all the way to 1 hour and 30 minutes, because the last 30 minutes of every live, I go over a concept. And I was talking about candlesticks and prices and the open and close of price. So if any of that stuff is confusing, just watch yesterday's live. And then today we're gonna go over some doji candlesticks, one of my favorite candlesticks. I might start it early at around 7:20, 7:15, depends on where we're at. But usually I do them at the last 30 minutes of the live, so. Well, thanks for joining, Sammy. Hope you're having a good morning. Hope you're having a good start of 2023. I'm glad you're tuning in. If this is your first time, I'm glad you're here. All right, let's see. So AUD is starting to sell, but again, I want to see a closure below that zone. If anything, if I do decide to sell, I want to see a closure of price. But for now, I'm going to keep my stop loss safe above that zone in case price decides to fake us out. All right, I might take a setup on Euro AUD, and I'll explain why in just a second. But if price decides to push off of the surface right here, off the zone we have marked up, then we most definitely can catch this fill right here. So let's see. We could make that a nice 1-2. Let me double check real quick. Okay, yeah, I think I'm gonna hop in on Euro AUD. Let's go ahead and mark up right here. I'm gonna place a buy, a 1-2, risking 36 pips. And I'll go ahead and explain the analysis in just a second. Give me a minute. All right, let me send this in Discord. What is this, Euro AUD? Give me 1 second, guys. I gotta make sure everyone's good. Gotta put my people first before me. This is AUD, Euro AUD, yeah. Stop loss is 1.54, 109. What is this, 36? Yeah. TP2. This is 72 pips. Okay. That works. Okay, so basically, let me explain this real quick. So we have a nice gap in the market. We have our nice demand zone. I wanted to make my stop loss safe, as I talked about in AUD USD, as you want to wait until your stop loss is outside that zone so that it's perfectly safe. But in this example, the reason why I'm hopping in, guys, this is really important, okay? I'm gonna talk about this later this week. I might drop a video this weekend. Is because I'm using an indicator on my meditator app called the RSI, which stands for Relative Strength Index. RSI, Relative Strength Index, okay? This lets me know when price is oversold or overbought, okay? When we have these market gaps, I simply check my RSI. If it's oversold, it's letting me know that price has to rebalance itself, okay? So at this point, since price is touching that surface of the zone and my RSI is telling me price is already oversold, then I know at some point this morning, it's going to have a retracement, okay? Let me know if that makes sense. If it doesn't make sense, I'll explain it again. But I'm combining that indicator or confluence with this concept of supply and demand and using market gaps. Okay, so let me go ahead and highlight that so I can talk about it later. In AUD, USD, if it has a close below the zone, then we can find a sell entry in the next two at 7:30. If not, we'll just start the class. And what is this? Euro AUD. Let me go ahead and update that real quick. Euro AUD. I think we should be good. What does LPI stand for, and how can we spot them and make use of them on other pairs? What does LPI stand for? Is that your question? Or is that IPI? If you are talking about LPI and HPI, I'll explain it at in just a few seconds. Okay, so LPI right here, I think this is what you're talking about. If it's not, just correct me. But LPI basically just stands for lowest point of interest, okay? So you guys are using these zones, right, of supply and demand. This being our supply, and let's say this being our demand, right? Price is fluctuating, it's doing its thing. Maybe you're in a range, okay? For this example. HPI, you're using it for any type of zone that is above price, or you can also use it for your supply zones. You can use them for both zones. HPI just simply stands for the highest point of interest of that zone, being the surface. LPI simply stands for the lowest point of interest in that zone, so the bottom or the floor, so the surface and the floor. So for example, with this trade that I have, this is our lowest point of interest in that supply. It's our lowest point of interest, okay? So how I use this concept is when I'm trying to look for entries or I'm entering with supply and demand zones, I want to try to put my stop loss near that LPI in case price decides to fluctuate in that zone so that my stop loss is safe. So my LPI being my lowest point of interest gives me a safe zone to put my stop loss. HPI meaning my highest point of interest gives me a safe spot to put my stop loss when price is moving down. So for example, if we're catching a sell like we have on AUD USD, my HPI right here, I would put my stop loss outside of that zone. HPI meaning the highest point of interest. That's the highest point price will reach in the zone before selling. On Euro USD, this is the lowest point of interest, the lowest point that price will fluctuate to before buying in that zone. That's the best. Those are the best entries when it comes to supply and demand. When your stop loss is safe and price is hitting that surface or what did I say? Or floor. Does that make sense? If it doesn't, I'll explain it again. Well, that is something I use. I think that's a concept that I started using that I kind of made up on my own system. I don't see a lot of traders use that. They do use the concept of interest, though. I don't think they use it in these zones, like lowest point of interest, highest point of interest. This is what I just started using because it helps me determine where I want to put my stop loss. It helps me see the best possible point for price to have that reversal for the zones that they fluctuate to. But please let me know if that makes sense. If it doesn't, I'll explain it again. I'll write it out. I'll be generous. In case you want to copy this, you can. Am I spelling that right? Okay, yeah. Support of zone. So if you want to take a screenshot of this or just have it in your notes, you can. But this is the concept of HPI and LPI when using supply and demand. If this does not make sense, please let me know and I will talk about it even more. Otherwise, we're going to move on. And I might make a separate video. I'm not sure if I have a video yet on YouTube that explains this. But if I need to make a YouTube video this month, I will. All right, we have about 8 more minutes and then we're gonna wrap it up. Again, if you guys have any questions, now is the time to ask them before 7:30 as we're gonna start this class, okay? Because I don't wanna start it late and then not talk about the things that need to be talked about. But so far, we only took 2 trades this morning. We have a sell limit on AUD. Price is doing its thing. which is perfectly fine. I'm not going to try to hop in. The move is already happening. If you guys want to hop in, you can. I'm still going to have this sell in place throughout the morning though, and I'll send updates in the Discord. The only active trade that we have so far is Euro AUD. We placed a buy, and price is doing its thing. So we might have missed a entry on AUD USD, but that's perfectly fine because I do have a strong analysis and it is really safe. So if we miss out on one trade, but we were able to catch at least one, perfectly fine with that. And I'll go ahead and highlight this for review as well. Oh, it's already highlighted. Okay, cool. Let me go ahead and mark this up. This is a TP2. And this is 72 pips. And this is what is this? This is 60 pips. So this is a bigger trade regardless. So we're all good. We're not missing too much. But so far we are looking good this week. Euro AUD, that is 5190. And then we can name this TP2 smacked. I'm telling you guys, putting alerts on your trades is very important. If you don't want to be a zombie on the charts, if you feel like you're stressed on the charts, simply just place alerts and walk away. You know, you can go to class, you can go to the gym, you can make breakfast. You don't have to be on the chart 24/7. Of course, I'm on the charts for 2 hours because I'm doing live streaming on YouTube. But when I'm trading on my own, like FTMO, guys, I'm on the charts for no more than 30 minutes and I'm going about my day. It's very simple. You don't have to be on your charts 24/7. There's a misconception that trading, day traders, they're on the charts like zombies. And I was talking to my parents about this because they don't really understand this as well. Because a lot of movies, they kind of depict how traders look in the real world. You know, you're in an office with monitors and people dressed in suits and you guys are all trading at once. Yes, people like that do exist in corporations, institutions. Those are what we call the smart money people, I guess, the banks, corporations, the people that have all that, all those resources. Yes, people like that exist. But for the retail trader, the average retail trader, they don't have all those resources. They're just trading from a monitor, their laptop. They're trading with their phones. You guys don't have to be what's the word? You don't have to work under a corporation to trade. You know what I'm saying? So there's a misconception that day traders, they have to be on the charts 24/7. But if you want to trade against that, you can. Retail traders, right? You don't have to be at that standard to trade. You can simply just be a kid in high school, a kid in middle school, sign up with a broker, and you're good to go. So we have about 4 more minutes. Again, you guys have any questions, now is the best time to ask them before we start. All right, let's go ahead and get started. Yesterday we left off on the engulfing candlesticks. Let's go ahead and come over here and talk about doji candlesticks. All right, so let me turn this down a little bit. Okay, doji candlesticks is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price, which means there is equality and indecision between buyers and sellers. There is no one in control of the market. So what this is basically saying, when you guys see dojis, right, you see wicks and there's a small body, that means price is in indecision. Sellers or buyers do not know where to go. You usually have to wait for the next opening of price to determine what's happening in the market. For example, if we go on, I believe, AUD USD, excuse me, we notice we have a bullish wick right here. Price is in indecision. Sellers are not in control. Buyers are not really in control right now. We have to wait for the next opening candle, which is bearish. So this tells us that the buyers lost control in the market and the sellers are starting to take control, right? So you guys see a wick, that means price is slowing down. It's in indecision, okay? The general name is doji candlesticks. Right? You have your highest price, your closing price, opening price, and lowest price. As you see, the opening price is the same as the closing price. This signal means that the market didn't decide which direction will take. When this pattern occurs in an uptrend or downtrend, it indicates the market is likely to reverse. Again, here's a live example on AUD USD. When it's in an uptrend, meaning price is moving up, and then you see indecision form right here, being this doji candlestick. Let me point to it so you guys can see what exactly I'm talking about. Price is starting to reverse, okay? The next opening candle is bearish. The sellers are taking control. So this is also a reversal pattern, okay? We'll talk about it sometime either tomorrow or next week, but we can indicate a evening star starting to form. Excuse me. Let's look at another example. So right here, the chart above shows us how the market changed direction after the formation of the doji candlestick. The market was trending up. That means the buyers were in control of the market. The formation of the doji candlestick indicates that buyers are unable to keep price higher and sellers push prices back to the opening price. This is a clear indication that a trend reversal is likely to happen. Remember always that a doji indicates, oh, I just read this, right? I did. Sorry about that. So if you're already riding that trend, it's time to take profits. It can also be used as an entry signal if it is combined with other technical analysis. Okay, cool. So let's talk about these patterns. There are two main patterns when it comes to doji candlesticks, okay? So the dragonfly is or pin bar, depends how you want to name it. The dragonfly is a bullish candlestick pattern which is formed when the open, high, and close are the same or about the same price. Dragonfly doji is the long lower tail that shows the resistance of buyers and their attempt to push the market up. So basically right here being the buyers, this body, they're attempting to push the body, the market up, but it is still forming a long wick, okay? The illustration above shows us a perfect dragonfly doji. The longer tail suggests that the forces of supply and demand are nearing a balance and that the direction of the trend may be nearing a major turning point. So one big takeaway that you guys can get from this, or just keep in mind, the longer the wick, the more indecision, okay? Or the likely price is getting ready to reverse. So at a given area of support or resistance or supply and demand, if you guys see a wick or a certain doji candlestick pattern form, that is letting you know that price is losing momentum for that trend. If you're in a downtrend and you see that price is forming a doji at the 50 level, you're using Fibonacci, and you're starting to see that formation of doji candlesticks, that means the market is ready to reverse, or it's getting ready to tell you that it wants to change its directional bias, okay? So you might see them a lot of fibs, you know, support, resistance, supply and demand. Just keep in mind that although a doji candlestick is forming, you still want to wait for the next candlestick to form, so that we know that the sellers are taking control in this example or the buyers are taking control. You don't want to primarily just trade off of doji candlesticks, because sometimes price can be indecision for a short period of time and then continue up. So you kind of want to use this at a given area of support, resistance, supply and demand after price opens up with another candle indicating that it's reversing. So in this example, our next open was a bearish candlestick, letting us know that price is getting ready to reverse. Okay. And again, vice versa, you'll see this at a downtrend. When a dragonfly doji forms, it's indicating that price is losing momentum, the buyers are losing control, and the sellers are going to take control of that market. The chart above, the market was testing the previous support level that caused a strong rejection from this area. The formation of the dragonfly doji with the longer tail shows us that there is a high buying pressure in the area. What do you guys notice about this chart? You guys probably can't see it as well as I can, but basically this is some sort of support. Price is forming some support right here. So if you can identify this candlestick pattern in your chart, it will help you visually see when support and demand are located. Just like I mentioned, if you can see this grouped in the area, if it's consolidating, you can visually see if there's a strong level of support or resistance. Are you doing live trading daily or once a week? I want to log in again. I'm doing it daily, Monday through Thursday, 6 a.m. to 8 a.m. I'll be live. Thank you, Lonnie. That was an awesome explanation. Thank you. I'm glad it made sense. Where was I? When it occurs in a downtrend, it is interpreted as a bullish reversal signal. Okay? Very, very simple. So if you guys have any questions, let me know. If you're watching this after the live, you can reach out to me on Instagram. But hopefully this section makes sense. Okay? I try to explain these concepts as if I'm talking to a 12-year-old. Very, very simple, guys. Biggest takeaway, the longer the wick, higher chance that price is going to reverse, okay? It's indicating that price is in indecision, meaning there's a high chance that the sellers or buyers are gonna take control. So, for example, if you're in a bearish market, there's a high probability that the buyers are gonna take control. If you're in a bullish market, there's a high probability that the sellers are gonna take control. Very, very simple. Let's move on. The gravestone doji, okay? Gravestone doji shooting star, depending on how you guys want to name these, is the bearish version of the dragonfly doji. It is formed when the open and close are the same or about the same price. What differentiates the gravestone doji for the dragonfly doji is the long upper tail. The formation of the long upper tail is an indication that the market is testing a powerful supply or resistance area. So it's literally just vice versa. You'll see these at a given area of supply or resistance, meaning that price is in a bullish market and the sellers are getting ready to take control. So you guys will see this when price is getting ready to sell. So in this example, right, notice how we have this gravestone doji right here. And then what happens? The sellers are taking control. Of course, we missed this entry because I have certain laws that I go with when I'm trading supply and demand, but you can clearly see that there's a gravestone doji formation right here. And what happens? The buyers are losing control and the sellers are now pushing the market down. Okay. Let's see. The image above illustrates the perfect gravestone doji. This pattern indicates that while buyers were able to push price well above the open, later in the day, sellers overwhelmed the market, pushing the price back down, like I just reviewed on AUD USD. This is interpreted as a sign that bulls are losing the momentum and the market is ready for a reversal. So here's another example. Again, what do you guys notice? What do you guys notice with this? There's two candles that are forming where? At a given area of resistance. So you guys want to try to identify these patterns at areas of support or resistance, depending on where price is at. See, if we look over here where my mouse is, yes, we do have a gravestone doji, but do we have any levels of resistance? Is there any supply? Or I'm sorry, is there any demand forming over here? No, there's not. So in this example, because we didn't have a strong zone that price was going to react off of, it pushed through. Okay. And I think actually, let me see something real quick. I think I marked up these wrong, guys. Yeah, I'm sorry. Sometimes I get confused with supply and demand because I use it so much. This is actually be demand. Let me fix that for you guys. for those of you that were here earlier when I was explaining the HPI and LPI, this should be demand. I apologize. This should be supply. I get confused all the time. Sometimes I just say OB, which is an order block, but if you guys want to divide them, supply when price is below a given area, demand when price is above a given area, okay? So supply, demand. Sorry for the confusion. The chart above shows a gravestone doji uptrend. Okay, so the chart above shows a gravestone doji at the top of an uptrend after a period of a strong bullish activity. The formation of this candlestick pattern indicates that buyers are no longer in control of the market. For this pattern to be reliable, it must occur near a resistance level, 100%. It has to be near a level of resistance, guys. Don't just use these candlesticks randomly. Like over here, it would not make sense because there's no level that price is going to react off of. It has to be a given area, a key zone that price is going to respect, okay? As a trader, you would need additional information about the placement and context of the gravestone doji to interpret the signal effectively. This is what I will teach you in the next chapters. Okay, so I think I'm gonna stop there. I think I'm gonna stop there, guys, because I want to spread this out and in the week talking about the morning star and evening star, and the next week we'll talk more about other candlestick patterns and then look at live examples. Okay, what I will do though, I'll talk about the other form, which is the hammer pin bar, like I mentioned earlier. I think this was called the dragonfly. Basically, you guys can just call this the hammer or pin bar. It does not matter, or whatever name you want to come up with that's easier for you. So, although this looks like a dragonfly candlestick, the main difference is the body. The body is just thicker. So I like to just make it simple. I simplify these candlesticks into two: the hammer and the shooting star. Hammer being that price is getting ready to reverse from a bearish market. It's reacting off of support and getting ready to pull up. And shooting star meaning that price is getting ready to shoot down, like we just talked about. So this candle forms when sellers push the market lower after the open, but they get rejected by buyers, so the market closes higher than the lowest price. And here is just showing an example, like we talked about earlier. You'll see this at a given area of support or a given zone of demand, okay? As you can see, the market was trending down. The formation of the hammer, aka pin bar, was a significant reversal pattern. The long shadow represents the high buying pressure from this point. Sellers were trying to push the market lower, but in that level, the buying power was more powerful, okay? So price was the indecision. The sellers did not know where to go. The next opening price was bullish, and what did price do? Continue to buy. So this is a nice pivotal point to catch a newly formed bullish trend. The most important to understand is the psychology behind the formation of this pattern. If you can understand how and why it was created, you will be able to predict the market direction with high accuracy. Very important, guys. And then vice versa, the name for the gravestone, I barely hear people say gravestone anymore. You guys can just call it a shooting star, which is the opposite. The shooting star formation is formed when the open low and close are roughly the same price. This candle is characterized by a small body and a long upper shadow, aka wick. It is the bearish version of the hammer, okay? So it's literally the opposite, like I just said. The illustration above shows us a perfect shooting star with a real small body and an upper long shadow. When this pattern occurs in an uptrend, it indicates a bearish reversal signal. The psychology behind the formation of this pattern is that the buyers try to push the market higher, but they're in indecision. The sellers are starting to take control, and they get rejected by a selling pressure. And that's pretty much it. And then next week, we'll talk about Harami. We'll talk about tweezers, tweezer tops, tweezer bottoms, and I think we'll start next week with that. Otherwise, I'm simply just going to review later today and tomorrow, and this weekend I'll go ahead and send some videos out that you guys can study as well. But hopefully this was helpful. Like I said, I'm going to start from beginner level and then work my way up to advanced, retail to smart money all year. So of course, I understand people that are watching this already know this. You guys already know all this information. You're probably asking, why is he going all over this stuff? This is basic knowledge. It's because since it's a new year, guys, I understand that a lot of people are starting to hop in trading, or they're trying to start the year right and get into trading again. And I want to start very simple. So for anyone that's watching this, I want this to be a free resource so that you can understand all this stuff and get it down to the core. So I'm going to start with any PDFs that has helped me through my journey, being 3 years in. So the Candlestick Bible, Naked Forex, psychology as well. We're going to talk about Atomic Habits. That's a really good book. Trading in the Zone. So psychology, fundamentals, technical analysis, and any other concept that a lot of people don't understand. My strategy, how I use supply and demand, how I use retail concepts, how I use the system that works for me, in case you guys want to use it as well, and any type of information that I think will be helpful. So that's what I'm going to do for the last 30 minutes of all my lives. So Monday through Thursday, 6 a.m. to 8 a.m. all year. And if you guys have any questions, of course, feel free to reach out to me in Discord or my Instagram at SmartMoneyAce. Can you add me as a member in your Discord? Yeah, it's in my description. If you scroll down from this video, you should see join Discord here today or something. Click that link. If it doesn't work, just let me know. I think someone had a problem earlier this morning. But read the rules. Please read the rules. A lot of people, for some reason, missed that part. Read the rules. Click that emoji. It looks like a target sign. Click that emoji so I know that you read the rules, so I can add you as a member. A lot of people miss that part for some reason. And again, if you guys are going to be consistent all year long with me, I am definitely looking for some moderators, people to work with. So if you think you're going to be up at 6 a.m. New York session, you're going to be tuned in, then feel free to help me out. Make sure my lives are good. Make sure my audio is looking good. Make sure the chats are good. That would be very helpful, as I am one person doing everything all at once. So that'd be very helpful. But we have about 10 more minutes. If you guys want to ask any questions, go ahead. I hope this session was helpful. Hope you guys were able to catch some trades this morning. If not, that's perfectly fine, as I do dedicate my lives for educational purposes only. If this session was helpful, I would love some feedback. If it wasn't helpful, I would also love some feedback. And let me know what you guys got going on today. Okay, I'm gonna add you as a member right now, okay? I got you. Alrighty, you're now a member. And that goes with Discord as well. If you guys want to help me manage the Discord, as I do expect it to grow all year, such as what I just did. You know, when someone joins the Discord and I'm not on the server, and you would like to make sure people are added as a member when I'm away, feel free to. But just reach out to me if you think you can do something like that. And then, of course, if you want to be notified for my lives, you just click that bell. So let me go ahead and update that real quick. All right, last 10 minutes. Let's go ahead and just check our trades, see what's going on. All right, Euro AUD is in profit. If you guys took this trade, that's awesome. We're going to break even at TP1, and then let's see what's happening with the trade we probably missed. Perfectly fine, guys. You're going to miss setups like this all the time. What's important is that your stop loss is safe, okay? I can't express this enough. Don't get greedy in the market. You know, don't follow price once you see it pushing down, because I promise you, if it starts to reverse and it hits your stop loss and then goes back into profit, it's going to drive you crazy. Promise you. One of my biggest mistakes I've made when I first started using this concept is I would see price doing its thing and I would get FOMO, fear of missing out. I would try to hop in, price would reverse, I'd be mad at myself. The best thing you can do is wait for price to hit a pivotal point to catch a reverse or a reversal. So in this example, I have this marked up. Since I missed this move for a sell, I'm gonna try to catch the next buy, the continuation of a bullish trend. So most people, they place a Fibonacci setup, or they just wait for a price hit a given area. I just joined the Discord. Are you able to see the lambs on your side just to be sure I remember? Let me check right now. What's your name in Discord? The lambs? I don't see you. No, I don't see you. I'm sorry. Oh, wait. I do. Okay, I don't think you clicked the emoji. I don't think you clicked the emoji. It's in the rules section. You go under the rules, it says click the target emoji to become a member. But I trust you that you read the rules. I'm gonna add you as a member, but in the future, and for anyone that's watching, please read everything. And please click on that emoji. It makes my life easier, okay? But I'll add you as a member, okay? And if you want to be notified for my lives, I'll also add you to that as well, okay? I'm gonna go ahead and update my Excel sheet, and then you guys can ask any questions. Otherwise, I'm just going to update my Excel and wrap it up this morning. This is Euro AUD. Let's place this over here. What we're using, RSI, what is it, buy? Lot size. No. Again, guys, we have news coming out at 10 a.m. and we also have news at 2 p.m. I'll keep everything updated later today. If I have any setups that I see in the market, I'll send them in the Discord in the given currency pair section. Otherwise, we're going to end the live in 5 minutes. If you guys have any questions, please ask them now or forever hold your peace or just wait till tomorrow. I'm just joking. This was, so we missed the setup on what pair was this? AUD USD. So we missed the setup on AUD USD, but we hopped in a trade for Euro AUD this morning, which is awesome. If you guys took this trade, you should be in profit. We're heading to TP1. I'll send updates in the Discord. Paste. Exit. All right, I think I'm good with that. When you trade, do you use a funded more often, or you fund with your own capital? I trade more of my own capital, to be honest with you. And I'm bringing back my personal capital recap videos on YouTube. So I'll start posting those sometime next week. Just wondering, I'm going the funding route. That's awesome. All year, if you're rocking with me, I expect you guys to get funded. Not an excuse, honestly. Or I'm sorry, it is an excuse. If you guys are just starting out with trading, I would say take your time. But if you are locking in with me, getting funded shouldn't be a question, honestly. Something that you guys are going to be able to do, get this year. What's your trading style? I'm not going to be able to explain that in the last 5 minutes, but just lock in with me and you should be able to discover that on your own. Yeah, no problem. I literally watch all your videos. I appreciate you. Thank you so much. Content's coming back this week. Horizontal, long form content. I know I've been posting a lot of short term content on Instagram and YouTube. Promise you guys, I'm not stepping away from my creativity. Coming back this weekend. Phase 2 should drop Friday, and then I have a video coming out Sunday. I just passed my phase 2 on 20K account. We'll get live now. That's awesome. Congratulations. Congratulations. Proud of you. So we have about 4 minutes. If you guys have any questions, any comments, any feedback from the live, that would be greatly appreciated. If this was helpful, let me know. If it was not helpful, also let me know. No problem. Mark Kennedy TV, I like what you're doing. Your videos have been very helpful. Hey, I appreciate you for watching. I'm trying to do my best. I appreciate it. But please keep making a video on how you use FX Street. So how I read news, how I read FX Street, how I incorporate that as a fundamental analysis. I might. So the only issue is, as you guys can tell, I do have a course. I'm not going to try to beat around the bush. All the questions that you guys have asked, if it's not on my YouTube channel, it is most definitely in the courses that I have on my website. So I will think about putting them on my YouTube, as I do want to make everything fair for the people that have purchased my courses. Because imagine if you purchased a course that has all the information that you were looking for, but then I started putting it out on YouTube. How would that make you feel? So there's a thin line. I might put some information out on YouTube sometime this year, but I got to think about it. That's the honest truth. I'm not going to lie to you guys and beat around the bush. Half the things that you guys are looking for are my website, but I got to think about making everything fair for the people that already purchased my services. So it's not just like they wasted money, you know? So I'll think about it. So we have about 2 more minutes. I'm gonna end the live. This was a really good morning. Shout out to everyone that tuned in. Shout out to everyone that's watching this later. And rinse, repeat tomorrow morning. I'll be live 6 a.m. to 8 a.m. And then Friday is going to be NFP. I might go live. I'll let you guys know in the Discord. If not, I think I'll still send out some analysis. But that's a maybe, because I have a lot to do this weekend. Super busy. For those of you that are in mentorship, I did record this live. I did forget to record yesterday, but I will chop this up and send out any important information that I talked about this morning, so you don't miss out on anything. We have about 2 more minutes. Any last questions, comments before we end today's stream? Alrighty, so I'm gonna go ahead and wrap it up. Again, shout out to everyone that tuned in this morning. I really appreciate you guys. We're gonna run up all year. And again, shout out to anyone that's watching this later. But I'm gonna go ahead and end the stream here. Hope you guys enjoy the rest of your morning. Of course, if you have any questions, please feel free to reach out to me. I respond to all my DMs and all the questions in the Discord as well. But until then, I'll see you guys tomorrow, and I'm out.